The month of August going out on a relatively quiet note for stocks after a roller coaster month. Let's find out more from Elizabeth Faublas as the latest from the New York Stock Exchange. Liz.
Hello to you, Pimm. Well, you're absolutely right. The last trading day for the month of August ending mixed, pretty flat, but with some excitement in the last hour of trading. Now, we capped off the biggest August slide since 2001. Now, it was a tug of war all day by late afternoon. Investors had breathed a sigh of relief as higher than estimated increases in consumer confidence and home prices tempered concern that the economy may relapse into recession. Well, then enter the Federal Reserve with the minutes from its August 10th policy meeting. At the close, we saw that the Dow and the S&P barely holding on to gains, the NASDAQ shedding about 6 points. Now, remember, I said that we trimmed the August slide. We didn't erase it. The tally for the month, quite a different story. We saw that the Dow was down about 4.7%. The Dow was down 4.7%. The S&P down 4.7%, and the NASDAQ giving back over 6.2% on the month of August.
Now, Liz, it looks as though home builders managing to hammer out some gains in today's market.
Now, that's right. Remember, I mentioned to you that there were some good news on home prices, thanks in part to a government tax incentive. We saw that home prices in 20 U.S. cities rise more than forecast in June from a year earlier. Now, investors seeing this as a sign that the market was stabilizing before sales plunged in July. Now, we did see a pullback at the close, which left just 5 out of 12 of the companies on the S&P Home Building Index posting gains today, and that includes Toll Brothers, KB Home, Standard Pacific, and Pulte.
Now, Liz, banks overall, what about the bank stocks? We had that report, J.P. Morgan shuttering its commodities prop trading desk. What about banks?
Well, banks overall were on the winning end. We saw that lenders posted their biggest quarterly profit in almost 3 years, $21.6 billion in the 3-month period that ended on June 30th. And that's even as the number of banks at risk of failure rose to 11% of insured institutions. And those results were coming from the FDIC's quarterly report on industry performance. Now, the agency's chairman, Sheila Bair, does caution that earnings remain low by industry standards. Pimm?
Thank you very much. Elizabeth Faublas reporting from the New York Stock Exchange.